if we behave like prior cycles, we would be topping in the 200 to 300 region.
Hey everybody, welcome back to Whiteboard Finance. Today we are talking about the Bitcoin Strategic Reserve with Sina. Sina is an active professor and the co-founder and CEO of 21st Capital. They specialize in Bitcoin research, custody, and security advising. He has a Ph.D. and he has 33,000 followers on X. I love his analysis. Thank you so much for joining us.
Thank you very much, Marco. It's a privilege. I've known your work for many, many years, and I'm so excited for our chat today.
Yeah, thank you so much. I appreciate it. So let's just get right into it. So we had an announcement last night by David Sachs on X, and at the time of this recording, Trump should be going live in a couple hours to announce this. So we had campaign promises kept. We had the Bitcoin Strategic Reserve clearly distinguished from other altcoin stockpiles. We get the go-ahead from the U.S. government. It's no taxpayer money to buy it. And the future acquisition, hopefully for Bitcoiners, is likely left to Congress. So if this is so monumental, why is Bitcoin not mooning right now? Why are we not at $250,000 per Bitcoin?
Yeah, so let's take a look at just what happened. I think, in my opinion, it couldn't have gone better. I got what I really wanted. Essentially, we had a stamp of approval of the most significant economic power in the world on Bitcoin. And they essentially, by establishing a strategic Bitcoin reserve, they confirmed that Bitcoin is, in fact, a nation-state grade asset class. So we got that. But if they were to actually purchase new Bitcoin with government budget, which is, where's government budget coming from? It's coming from me, you and I, and all the other taxpayers. It would have been very aggressive. And especially because all that money is funded by debt, essentially that means they're printing dollars to buy Bitcoin. It would have been great for our bags, but it would have been too aggressive for the government. So the best we could hope for is if they kind of get out of the way, simplify, approve, and give the green light to the industry to go forward. That's all we really need in the industry. But we also got a couple other things. We were really worried about, all these altcoin lobbyists pushing their crypto securities in the same basket as Bitcoin. We got that separation very clearly. And then there is this possible acquisition clause where if the government finds budget neutral opportunities to buy Bitcoin, they have the ability in the executive order. So I'm the kind of guy who believes it when I see it, so I'm not going to kind of speculate on whether they're going to buy any, but the door is open. So that's all great. I think this is fantastic, and I couldn't be happier that the market is not taking us to 200,000 because I still need to keep accumulating. I don't want the price to go that high that fast. But why it's not happening? I think the day before I put out a tweet and I mentioned that I feel like the market is overly optimistic. And I think the reason we crashed, or at least we are not really flying, is that people had these, too optimistic expectations about what's going to happen. People really want to believe that the U.S. government will come out to save their bags and pump their bags with taxpayer money. That kind of felt like fantasy. And it also did feel like people have made a lot of bets and leveraged bets on based on this. So once the expectations are not materialized, you get the price correction. But this is the kind of thing that has short-term negative effect, but long-term massive positive effects. Just yesterday morning, we were hearing that Belarus president was saying maybe we should buy Bitcoin, maybe we should mine Bitcoin. And I'm expecting this executive order to accelerate this, like in every other country, in every other nation state, discussions about assets and treasury. Now this becomes a legitimate discussion. This is now not a crazy magic money for the kids. This is now something that the United States has in reserve. So this now becomes a legitimate discussion for every other country. And by extension, corporations, organizations, and individuals. So it's massively bullish, and I can't be more excited that it's short-term bearish.
Yeah, I absolutely love it. I completely agree with you. So if I had to ask just for layman's terms, for the people that, don't really, follow this as much as you and I do, what exactly is a Bitcoin strategic reserve? So how does it differ from, foreign exchange or gold reserves or cheese reserves or oil reserves, for example?
Yeah, in the traditional sense, reserves are used for balancing. Economies don't like volatility, right? So, for example, if you are trading with China and if the exchange rate is volatile, you don't like that because overnight your exporters and importers have to deal with different economics, right? So your economy will get hurt if exchange rate fluctuates. So what you do is you accumulate a bunch of yuan or some other currency. US probably doesn't have to do this, but many other countries establish these currency reserves so that if exchange rate is not favorable, they could sell or buy the other currency or their own currency and balance things. Same thing with oil. With oil reserve, we have a strategic purpose as well. This is a critical commodity for the economy. So the US doesn't want to be fully dependent on what's available on the market. Having some inventory at home under 100% control is very valuable. It's a strategic assurance, and they can also use that for balancing, possibly sometimes even for political purposes. If they want to balance the price of energy, they could sell or buy in that reserve. But that's the purpose, essentially stabilizing, giving the decision makers the stabilization power. But what we have with Bitcoin, I think it's a lot less of that and a lot more of just a long-term investment for the government. And what they have put in the announcement is a slightly, again, different. Like with the strategic oil reserve, Biden was drawing it down. Now there is discussion that we want to build it back up, right? So it's going to go up and down again because of the economic volatility. But for Bitcoin Reserve, that's not the case. They're essentially thinking of it as more of a long-term store of value for the government. That's exactly actually what they mention as well. And the idea is, hey, we want to have a store of value, but we also don't have any extra money. That's not going to put extra burden on taxpayers. So what we are going to do is we're just going to keep what we have and not sell it. And what they have is reportedly 200,000 Bitcoin, but a lot of it is for some of it is from Silk Road that they have forfeited, and it's government. But the rest is from Bitfinex hack, and it's essentially just custodied by the government. So the actual number that we will see in the strategic reserve is going to be a lot smaller than 200,000 Bitcoin, maybe I don't know, estimates are 80,000, 90,000. Once the Bitfinex case is handled, they have to give those back. But the point is, like these numbers actually are not material. The government is not buying anything, and they were not about to sell in the short term. So from the supply and demand, this is nothing. And I understand the market is not like too excited about this, but from the regulatory perspective, from the idea that US is finally giving that official stamp of approval. I mean, there has been talks, right? There's been a lot of talk that we love Bitcoin, we love everything, we love the industry, we support it. But this is one of the most concrete steps that they have taken. It's now makes it fully official. So that's what is valuable to me. That's a green light to investors. Now, actually, it might be that this executive order will bring a lot more money globally into Bitcoin than what the U.S. government would have brought if they established some purchasing. So it has multiple facets, yeah. So some sides of it are not super exciting, but the hidden part is a lot more. And a similar treatment as far as not selling exists with altcoins. Although I would recommend them selling the altcoins, but they want to keep them. It's fine. At least the option of purchasing is explicitly excluded, so that's good. So we're not going to be pumping corporate coins or centralized coins, so that's fine. And yeah, let's see what the market thinks today. Looks like some more bullish people have woken up, and the market is walking back some of the sell-off. But let's see how this unfolds.
Yeah, I think that's well said. Does anything concern you with this being an executive order and not an act of Congress? Because from my understanding, and I'm not a political science major, I'm a finance major, they can repeal, the next administration can repeal anything done through an executive order. Is that correct?
Yes, of course. Yeah, it can be repealed pretty fast. If you want something super long term, you go through Congress. But the Congress is very difficult to get things through, especially for something like this. This is still aggressive. Um, and I don't know what portion of the Democratic Party will be supporting it. I imagine because now it has become so political, it will be a very small number. So they'll have a difficult time going through the regular process. So my time frame for the Lummis bill in Congress is not less than a year. So that's going to take time, but this will just get us started. And 4 years later, the industry has grown so much and Bitcoin has penetrated to so many other balance sheets and so many other government discussions that it may not even matter if they repeal it.
Yeah, it's well said. So, in your opinion, this is potentially a sell the news event, but in the long term, you're still bullish.
I mean, what I see is like people were extremely overly optimistic. I was hearing smart Bitcoiners a couple days ago saying, "Oh, this is going to be so amazing. We are back. We're going to explode upward. Volatility is back. Let's go all in." Once I heard that, I was like, "This is definitely a sell the news event." And it's all short term. But however, you have to consider that we also have a little bit unsupportive macro backdrop with all the discussions that Trump has brought with tariffs. Basically, he's kind of adding a lot of volatility to the global economy right now. And my thesis is that we're going to have a V-shaped economy for a while, where all the turmoil that we experience from the tariffs and from the unknown effects on the labor market and so on, we're going to have some weak performance for some time. But once the tariffs will definitely end in an amicable way because it's too painful for all sides. This is basically some kind of a little fight that they're picking right now. And they'll reach an agreement, especially with Mexico and Canada, very easily. Maybe China would be a little bit harder to figure out a more sustainable deal. But at the end of the day, both countries know that this is too painful to tolerate. So for a while, this was going to be weakening economic activity. But once those negotiations are done, and we've also given the Fed a little bit more time to absorb all the data from inflation. We already see inflation rising. At the same time, labor market is a little bit shaky. So if this actually continues, we are getting a complex which is very bullish. One is that the tariff turmoil is going to subside, and we're going to have clarity what's going on. Because right now Trump is like putting tariffs one day on Canada and Mexico. Next day he's like, "Oh, we reached a little bit of agreement. This is excluded. That's excluded." And he's a businessman at the end of the day. He knows that this is bad. And while a bunch of people, I mean, I've been discussing this for months, and some people were saying, "Oh, this is all going to be great," but Trump himself says there's going to be short-term pain. So this is known, but his strategy is that let's use the short-term pain for long-term gain. And he knows that at the end of the day, the best outcome is if they reach an agreement and get rid of these tariffs. So once that's done, you have a nice dip, and there's no negative headwind for the economy. And then if we also get some of the fundamental damage from these tariffs, which means slower job market or maybe some higher CPI readings, that's also just gonna incentivize the Fed to come in. So it's kind of like we are going down this valley and we are somewhere close to the bottom, but we don't have much lower to go, because the lower we go, the more incentive to get rid of tariffs, the more incentive to stimulate. Both will kind of be, if you will, a put for the
Yeah,
market.
that makes sense. That's well said. So my brain is going in two different directions right now. One, I want to talk about M2 money supply and typically how Bitcoin and other assets typically follow that chart, right? Money printed goes burr, assets go up, right? Then also, just from a game theory / geopolitical standpoint, ever since I got into Bitcoin, this was late 2017, and then I've been buying literally, dollar cost averaging since January of 2018. So I've been following this for about 7 years now, 7, 8 years. The story was always, hey, it started with internet nerds on a forum. Then it's going to be, maybe some friends or a small organization. Then it's going to be small businesses, then publicly traded companies, then nation states, then central banks, then right. And we're actually kind of seeing that play out, right, over the last 7, 8, 9 years. So let's tackle the geopolitical side of things first. So how does this concept of a Bitcoin strategic reserve, you alluded to it a little bit earlier with Lukashenko from Belarus. Are people going to start to get away from the dollar, or is it going to be treated more of like a gold, as gold is hitting, all-time highs every week over the past couple months now?
Listen, it's going to be very difficult to dethrone the dollar. The way I understand the global money system is that it's not fully, dollar is not the king fully because of the force of the United States. It was kind of like there was a economic powerhouse behind it, but the world economists also realized that, hey, guys, we actually have created this crazy system that instead of trading on the common currency, we now have created, every one of us are printing on our own fiat, and now no one wants the other country's thing, right? So over time, and essentially we took back the global economy to a barter system where people were exchanging currencies, and that's not the function of the money. The function of the money is to actually make trade easier and simpler. Now we have to deal with several hundreds of currencies, and it's friction. Like right now, when you're dealing, when you're buying something from Malaysia or selling something to Malaysia, right, you don't want their currency, and if they give their currency to you, you have to get rid of it somehow. Who's going to buy it from you, right? You have to kind of find another trade with the same country to give it back. So it's very inefficient. Instead, we want something common. So with the little push of the U.S. military and et al. And all the stuff around it, people coalesced around the use of the dollar. So it's very difficult to take that away because it's expensive. Like I said, like say Russia and China, they want to trade. Okay, China doesn't want Russian money. Russia doesn't want yuan because they can't use that elsewhere to buy something else from another country. So they want to actually get away, but they have to find a better solution, right? I don't think China will trust Russia and vice versa. I mean, no one trusts each other. However, with Bitcoin, actually, we have something that theoretically has everything that's needed, right?
It's
neutral.
trustless. It's trustless in a way.
It's trustless. No one can censor it. Like if United States cannot kind of ban Russia from using Bitcoin, and it feels a lot safer. But there's one problem. It doesn't have enough liquidity for nation state level consumption. If Russia say wants to buy a lot of it, suddenly the price will fly. So that's remember that volatility is not something central banks want. So, but this is easily solvable. It's just a problem of waiting until this money is acceptable in enough places in the world so that it's much more liquid. It absorbs trades a lot better. That's kind of the long-term vision. In the meantime, to answer your question, everyone understands that this is a sponge that's absorbing fiat liquidity from the dollar, from every other currency, and from every other investment. It's very famous that people run the numbers and realize, hey, actually, if I buy Bitcoin, it's going to be better than buying just yet another house. Maybe if your first house, I wouldn't be opposed to it. You need a nice place to live in. But investment right now has a huge hurdle rate. When you compare any other investment with Bitcoin, it makes little sense unless it's a fantastic deal. So over time, Bitcoin is kind of making everything else less attractive and absorbing capital to it. So the market will grow, and everyone who stores value in it will gain. And that process itself works as marketing to bring in even more capital.
Yeah, that's a great way to put it. I have a video that I came out with about a year ago called "Bitcoin is the monetary premium vacuum cleaner," because that's pretty much what it is, right? So to your point, there's people, selling rental properties and getting out of traditional assets or even some alternative assets to get into Bitcoin because it just makes more sense. Because Bitcoin is 100% monetary premium as opposed to, buying a house which you're taking away from like a single mother of two kids, and you're using it to rent out to someone, right? It's not its intended use.
Also
Yeah,
socially, if you also want to think about this welfare, this is not an ideal where, some product or commodity in the economy that's needed for some use now has become my speculation vehicle.
that's right.
And if I invest in a lot of rental houses, I'm just going to drive up the price of houses for everyone, and that's going to put pressure on people's balance sheets, right? So
100%.
it's actually very good for this to happen.
Yeah, it brings things back to their utility value as opposed to their speculative value. So, yeah, you did a great job explaining the Bitcoin strategic reserve, some geopolitical implications. I did have a couple more questions, but I actually want to get into your Bitcoin quantile model. So I'll share my screen right now. And you created this with Plan C. I'm not sure, whose idea it was, but I love this because it's a play on all the models that have been pretty famous, but I think it's very unique because we've all heard about, Plan B's, model. We have Giovanni's power law, for example, but this, I really like your take. So if you want to just take some time to explain this, how you came up with it and how it works and what it actually displays, I'd really appreciate it.
Yeah, this is something we came up simultaneously with Plan C. We've been discussing Bitcoin analysis throughout the last year, and this came out of our discussions. And brilliant analyst, definitely people should follow what he has to offer. But basically, our idea here is that we have identified that for whatever reason, Bitcoin has been following a power curve, a log-log relationship with time. So, and if you unpack that relationship, it basically says Bitcoin value goes by X% if its age increases by X%. So if the age of Bitcoin doubles, you could also see for every doubling, the price increase in percentage term is the same. So it's kind of like Bitcoin has this scale invariant properties that it only cares about its age, and we haven't seen this in any other asset. Something that grows with time in a very predictable manner. Now, by that, I absolutely don't want to imply that math or one equation is dictating what's going to happen with a complex asset like Bitcoin. However, we see extreme level of regularity in the way Bitcoin has grown, at least so far. And you can write the equation, like I said, if you model it as so if you model logarithm of price as a function of logarithm of time, you get a pretty nice line that doesn't show any signs of bias. It's always going through the middle of the data, and it's doing a good job explaining the trend. Okay, and we've done a lot of work with Plan C on this in terms of examining the robustness of this. Is it dependent on what particular outcomes in one of the cycles, or is it dependent on some anomalies in the data? And it's been extremely robust in our tests. So taking that trend line, you can add this quantile approach on top of it. So if you run a regression, like a regular OLS regression, that gives you just one line, and that line is the mean of the distribution. That goes through the middle of all the data points. However, that doesn't tell us anything about the spread, right? And we always see that Bitcoin goes below the trend line, which I sometimes call the fair value line. Goes below it in the bear market, and in the bull market, we enter the bubble and we are above the line, but we always come back to that trend line. Now, using the quantile model, we added this capability on top that we are also able to model the full distribution. Essentially say that what are the likelihoods that Bitcoin by next year is in this region or that region, and all that is derived from the historical behavior of the price. And this is completely different from TA. This is a quantile regression where the model is absorbing all the data points. It's not connecting dots. It's absorbing all the data points and estimating what would be the first quantile of this whole distribution over time. And then same thing for second, third, all the way. You can do this all the way from first quantile to the 99th quantile. And that gives you, like, if you just focus on the first and the last, you get a beautiful channel. And that channel probabilistically, so if you, on the chart we see, from the bottom of the purple region all the way to that red region on top, this is an area where it should cover 98% of the probability. So it doesn't mean we can't go outside, but 98% of the time, this channel is where the price will remain in.
So for layman, real quick, just for people that don't understand quantile, or just maybe it's hard to read the chart, you're saying there's a 98% probability where my cursor is for Bitcoin to be anywhere from 41,000 to 223,000 spot price, correct?
Yes. So at any point in time, of course, at this point, we know that we are in the beginning of a bull market. So we might bring in some extra information about bull and bear, but this model is agnostic. It kind of pretends that we have no idea whether next year is going to be bull or bear. And it's a good assumption because Bitcoin always surprises people. So, but the absolute lowest, with 98% confidence, the absolute lowest that this model would expect is, for example, if you look at the chart, 55,000 in the beginning of 2026.
Mm-hmm.
And then the highest is 282. Right? Okay. So if, again, it can go outside of this range, but it would be very unlikely. So we don't have determinism. We have probabilities. Like probabilistically, it would be very, very unlikely to exceed this range. But people are going to say that's a huge range. And it is. But first of all, it puts things in perspective. So if somebody says, hey, next month, actually somebody was saying, like a very famous person was saying, like this Friday we are at 250. So we know that based on this model, it would be something like 0.0001% likely to get to 250.
Because it's above this 99th quantile.
Exactly. So it would be very unusual historically. And if that happens, I will definitely be trimming some of my position because it happens once, but it can't continue. It's going to come back to the actual fair value, right? At least that's how I think about it. I see that outcome as likely. Now, another important piece of this is this is also probabilistic. It's not saying that from 55 to 282, all of it is equally likely. It actually says that the higher we go, the likelihood goes down. Mm-hmm. So that's why you see I have this thing called risk score in the red, in the bottom right of the chart. Risk score, yes, that says 54% right now. So price of 88, if you look at the full range of the channel, we are at 54% progress from the bottom, okay? Now that gives me a very critical value. That value tells me it's essentially a valuation model for Bitcoin. And that tells me how much of the potential progress towards the top of the channel is happened. 54 essentially means pretty much none of the real bull market has started yet. If you look at the last cycle, the main explosive part of the bull market happened in 2021 when we were in the yellow region and the orange region and the red region. So the main part of the bubble, the explosive power price action happened in that region. We haven't even entered that. So this model actually allows us to understand where we are in terms of the valuation. Like, is it overvalued? Is it undervalued? We are at 54% progress, which means massive amounts of appreciation is still left based on historical performance. Okay. Plus, the higher we go, that risk score also goes higher. So you exactly know what are the risks of a reversal. Okay. So in my mind, the way I would use this model is if we reach a risk score of 80%, I will be a little bit wary, right? Because I'm not going to say we absolutely have to hit 99th percentile every time. Maybe a little bit lower, maybe a little bit higher. That's the idea of statistics. It never happens at the same time. So if we go to above 80, I've called it a risk region. And that's where we get to that orange region. Yeah. So the risk of reversal in that region is between 80 to 90%. So a little bit risky.
Okay.
If we go above that, so let's say by the beginning of 2026, for instance, if we are at more than 207 exactly, if we are above that, I'm going to treat that as danger zone. So I'm going to be at this, even if I do nothing to my stack, psychologically, I will be ready for a topping of the market in that region. So I really like to treat the market as probability, not as a particular number or particular price target, which has no basis. So this model allows you to have a metric of risk at any point in time.
So just for a very cool snippet, if I decide to cut it and put it in the beginning of the episode, people love price predictions. So if you had to give it a number, what is your prediction? Are you still are you a 4-year cycle guy? Are you someone that just, bases it off the quantile model and the current spot price? What are some probabilities based on this chart?
I would say, let's say by the beginning of 2026, going beyond 282 would be very unlikely. And I would say if we behave like prior cycles, we would be topping in the 200 to 300 region.
Wow. Okay. You heard it here first. Very good. Okay. Anything else you wanted to add on this? I think this is great. I think it provides some perspective because, famously people say all models are wrong. Some are useful. I think this one's very useful. And I plotted the power law chart, and I keep a little spreadsheet of like where the current spot is and, how high or low percentage-wise it is from the current power law prediction. I will be referencing this as well in the future, and I'm glad you updated it. Is there a live version of this anywhere, or is it just screenshots?
I'm glad you asked. I'm glad you asked. We have created a product called Bitcoin Intelligence, and that's going to include live charts for all of these, easily accessible, and basically it's ready to go live any day now. So
Okay.
we will be announcing it. We actually do have a wait list on our website as well, where people can sign up and wait for the actual announcement. But it's pretty much 99.9% ready. We are debating whether to go live in a few days or more than that, but it's going to be ready, and it's going to have all the quantile values and risk score and everything, plus other charts.
Okay, where can people join the waiting list?
So it's going to be 21stcapital.com slash waitlist dash BI.
Okay, perfect. Okay, I'll put that in the show notes as well. Okay, well, just to wrap things up, thank you so much for your time, Sina. I appreciate it. One last thing, because you guys do talk about, security and hodling and all that stuff. I obviously, hodl my own coins. How should a government or an institution like this, if you want to look at a government as an institution, how should they manage a Bitcoin reserve? Do they just put it on a little wallet and throw it in Fort Knox, or what are they doing here?
Well, first of all, right now they're not managing it well because Senator Loomis asked the government, asked U.S. Marshals to account for the coins, and they can't. They don't have an easy way to tell how much they actually hold. It's very funny, but there are two ways. One way is the lazy way, which many organizations right now do. They find a custodian or some sort of a technology provider that will keep the coin, and then they will also have contractual relationships for disasters and so on.
Mm-hmm.
But to be doing it the Bitcoin way, they'd have to be establishing a multi-sig account with several keys distributed in several areas and layers of backups. Today, we actually do have that technology, which is exactly what we also use for our smart vault. It is technology based on the recent advancement of the Bitcoin protocol, which is the mini script. It allows you to have a multi-sig, but the challenge with multi-sig is it's still, if you really want to, you can still lose your coins in that scenario, right? It just makes it a lot harder. but you can still lose it. So this technology allows for several layers of backups. If you lose all your keys, there is another backup that gets activated. If you lose the backup, the other backup gets activated, and those backups could be held at some other custodian or some other resource. But this way, you keep your coins, and at the same time, you eliminate the possibility of loss. It's a lot safer than a custodian, which unfortunately we still hear a lot of coins being mismanaged at custodians, and we just had the Bybit hack lately. So I think it would be a safer approach, but if I'm going to guess, they're going to go with the simplest approach to just outsource everything to some other company.
So how do you feel, and last question here, I appreciate your time, Sina. Last question, how do you feel about all these ETFs, not all of them, but about 9 out of 11, I believe, custodian with Coinbase? So is that just another attack vector? Is that a honeypot? What are your thoughts about that? You have the Fidelities that have, they self-manage, but then you have, 9 out of 11, I believe, going with Coinbase.
I would say that's the worst part of these ETFs. Like, I don't have any issues like with someone owning a lot of coins. That's a lot less of a risk. But the custodial situation that we have, if something goes wrong at Coinbase, which is not zero, the likelihood is not zero, that's going to be a catastrophic effect for the whole industry. So we'd actually like to see some more decentralized custodianship, if that's the right word. But right now there is a huge amount of concentration at Coinbase, and it shouldn't be. I mean, it's not that difficult, but somehow Coinbase has positioned itself as more of a monopolistic player in that realm, and that's not really good. The risk is always there. However, as humans, we underestimate the risk. Like, what are the chances that the money at the bank you can't get your money at the bank? Like, is there anything more trustworthy in today's financial world than a bank? But we always know that every few years there's all these issues with banks, and banks go bankrupt, and there's bank runs and so on. And ultimately, we figured out that we can't really solve it, and now we have to use the FDIC insurance and so on. So the risk that these systemic collapses do happen, but they don't happen often enough for people to be alarmed. So I would definitely love to see this situation change, and ETFs actually, develop their own internal infrastructure. And it's possible. Fidelity did it, so why not?
Yeah, I agree. Yeah, I've created memes where I have the Trojan horse and I have Gary Gensler's head and Brian Armstrong on the top of the horse, and then you have executive order, 6102 or whatever, and then the plebs are just the actual Greeks or whatever on the bottom of the screen. But
yeah, if Coinbase hires Gensler, the meme will be complete.
Oh yeah, 100%. This was from previous cycle. This was before. It's an older meme. But no, I appreciate your time, Sina. Where can people learn more about you or find you online?
Check out our website, 21stcapital.com, and on Twitter I am my username is Sina_21st. I put out commentary on all things Bitcoin and economics and quantitative modeling.
Love it. Thank you so much for your time.
Thank you very much. It was a pleasure.
My pleasure. Bye-bye.